G'day taxpayers. Wage price index data just released and confirming a 0.8% increase in wages in the September quarter. The annual increase 3.4%, so steady as she goes. And confirming that wages growth aren't really a problem in terms of the inflation outlook. And indeed, when you dig a little deeper into the numbers, it shows that the private sector, which of course is the interest rate sensitive sector, because public sector wages are determined by the decisions of the government and the Fair Work Commission and the like. But basically, the private sector wage increase was only 0.7% for the quarter, 3.2% for the year, which was the weakest rate of wage increase for the private sector in 3.5 years. So what's going on there? We know that the labour market has been softening over the last 2 years, not a precipitous decline and deterioration in labour market conditions. Sure, it's not that bad, but with the unemployment rate having gone from roughly 3.5% to roughly 4.5% over the last couple of years, job vacancies trending lower, a big supply of new labour coming through the economy via immigration, it's little surprise that we've got this softening in private sector wage conditions. So all in all, it fits with the scenario that we are moving the unemployment rate above the NAIRU, which means that we've got a degree of slack operating in the labour market and in the economy. Clearly GDP growth sub 2% is weak, whichever way you cut it, even allowing for productivity adjustments. So suffice to say, all of this hullabaloo about 1 quarter of CPI data, which has spooked the RBA, spooked the markets and spooked the drover's dog, we've got a situation where the economy is still subdued, wages are moderate and moderating for the private sector, and that the trend for inflation is still more flat to down rather than up. And so while the RBA is not going to adjust interest rates, while it's got that bee in its bonnet, when the dust settles from this inflation quirk that we saw last quarter, rate cuts are still on the agenda for 2026. Thanks.